Hi everyone, welcome back to Be Rich podcast. As promised, me and Arun plan to talk about stress test today.
I have seen an article from a newspaper. It says SEBI stress test, largest small cap mutual fund scheme to take 27 days to liquidate 50% of its portfolio.
So what basically a stress test is? It imagines a situation. This comes from medical test, stress test. They'll have in medical test something known as the treadmill test. Have you done it? No. Okay, they'll have a treadmill. When you're sitting on the treadmill, they'll put an ECG machine for your heart. They'll put a blood pressure. Then they'll measure the amount of oxygen your body is taking in and giving carbon dioxide. They'll measure it. Then they'll slowly make you walk on a treadmill. Then they'll increase the slope, make it go faster and faster and faster till the point you say, I can't do it anymore. And you tell them to stop it. So then they'll see how does your heart and your body react to more and more physical exertion being increased, stressing your body. Seeing how does it react. So this will tell them how good your lungs are, your VO2 max. It will tell them how good your heart is, or if you're able to cope with stress. So you're in a controlled environment. In that controlled environment, to see if there's a problem with your physical body, to take a diagnosis of this is what the doctors will use, sports people use to improve, see where they can make improvements. Because especially like being sprinters, a matter of milliseconds, nanoseconds can make a difference between gold and silver. So they use all this. The same principle is true in financial instruments. Very famously, this is done with banks. After the financial crisis last time, all central banks, even RBI, tells now and then the big banks, they put them through stress test. In stress test, there will be 3 types of scenarios. First scenario is the baseline. Baseline is where you are right now. Then they'll take an adverse scenario, meaning something bad happens. Then they have severely adverse scenario, which is the worst case. So it's like, imagine adverse this, stock market crashes. What happens? That is one. Severely adverse could be Pakistan, India declare war. In that situation, what happens? So we'll check the financial health of the bank. The same principle is now being used by SEBI on mutual fund houses. Because what's happening is they want to know if these mutual fund houses, are they adequately liquid? Meaning, let's say investors suddenly all run into them and say, give my money back. Will they be able to give some money back?
No.
Right. There's a big difference between a bank and the mutual house. Mutual fund house has to sell. Right. After they sell, they have to get the money, then they return it to the investor. So it's a dynamic pricing which is going on. If the market is crashing, the price will be declining. So the amount of money you get back, the amount of money you get back can drastically vary. Right. So you might tell mutual fund house, give me the money today. He's like, boss, I'm trying to sell. No one is buying, you have to wait. Everyone's trying to sell. So all that scenarios is involved in. While in a bank, it's your money. It's a savings account. So they just have to make sure they have enough liquid capital. So in a stress test for a mutual fund house is slightly different. So what SEBI is asking them to do is, especially the small cap and the medium cap, how many days will it take for you to at least to sell 50% of your holdings, which is quite severe. It's a severe correction. It's not saying every single investor
It's not asking to sell
all of it. They're not asking to sell. It's run a simulation, right? If you had to sell, let's say you have 100 clients, 50 of them want their money back, which is a severe condition, which is a very stressful condition for that fund. How long will it take you to get that money and return it? Assuming the stock price is not going down. So what SEBI said is to give back this information. So on the article, you'll see different mutual fund houses have given different numbers. The baseline is liquidate around 50%. They're saying it will take them around almost 40 days, which is a big number, which is not good because that means there's so much of money in small cap and medium cap for these fund houses. It'll take them so many days to at least get 50% of the money out, which is a lot of money. And in case the market corrects drastically and deeply, that stress test will become a reality. Because if you suddenly see, let's say, Fed comes out with some news or Russia and US decide to do something, and FI start pulling the money out, market starts moving downwards. Investors who are like you and me do not know what is happening. We cannot hold for long term because we're getting nervous. We've been thinking we have 20 lakhs, 30 lakhs sitting there and feeling very happy. Now someone tells that 20 lakhs, 30 lakhs will become 5 lakhs, 6 lakhs. Don't worry. You wait for 6-7 years. That will come back to 20. You will not. You will want to take out. Yeah. You'd rather discount 5 lakhs. You'll say it doesn't matter. Instead of getting 20, give me 10 at least. I want to get out. So that scenario, if it happens, you're going to have a problem. And that is the bubble which we're sitting on. When SEBI is saying there's froth in the system, there is price manipulation happening, and there's also froth sitting in the system. There's a bubble in the small cap and medium cap. But as an investor, me and Anand have been telling, if you have made profit, we spoke in the last video also. No, instead of worrying about stress tests and all this, if you have made profit in your small cap, it's a good time to at least remove your capital. If you want to stay in mutual funds, you're very keen on being in active funds, and you don't want to leave mutual funds and active funds, there are better opportunities even in large cap. Because if you look at the PE of some large caps, they're very reasonable compared to where these small caps are. So imagine small caps being more valuable than large caps. It's like some soap wala who's making soap in VM Street and selling. It's more valuable than ITC.
That's not possible.
As an investor, I tell you this, you'll think I'm a fool. But that is what's happening in the market. So, best thing to do if you're feeling nervous, and like the scenario I said out plays out, happens, where market corrects and you might lose, and you don't have the stomach for this, right? You can't bear that loss. Best is to enjoy the profit now itself, take it out. What in case, let's say you put some money and it's gone up by 20-fold, right? It's not going to go up by another 20-fold. The short term.
There's a limit to every
it's already reached it. So you might, at most, you'll miss probably another 5%, 6% on the upside. Might as well cash that in and put it in somewhere safer, is my feeling. I hope people think of that and consider that to, instead of being in a situation where there's no hope for any more growth, to move their money somewhere where there's at least opportunity for growth, or at least opportunity for staying stable. Where there will not, even if the market corrects, that will not correct huge. This is what I would say. But this is what that article is about, stress testing. And SEBI is giving all the signals, saying be careful, be careful, be careful. They came out and said it. That's fraud. Then they told mutual fund houses, be careful. And ICICI said, we're not going to put more money. Then they're ordering stress tests. So, and they're saying investigation. No, everyone's feeling it. Like a doctor. You see the doctor coming and checking on the patient 3-4 times. You are the relative sitting there next to your uncle. Okay, and he's breathing, he's looking all right, he's talking. But the doctor keeps on coming every 10 minutes. Different specialists is coming and looking. You'll be wondering if something is wrong. You'll ask the doctor every time, you're coming so many times. You said everything's okay. No, doctor said, no, I'm just checking. Then he tells the nurse, you ask this other doctor to come and have a look at him. You send your report to this man. But then you ask him again, is some problem there? He's like, no, this double checking. If he keeps on saying that, you'll feel nervous. That's what I'm feeling. Right? So then I would also prepare for it. That's my advice. That's what I would do with that information. So I hope you guys understood what Arun has understood now. What a stress test means, what all this news means. And we've been talking about small caps for quite a long time. Anand and me have never been the ones who've been advising in any shape or form ever to invest into small caps and medium caps, especially active funds. We've always been saying give it a miss. But those of you who have been in it and who have managed to make some money off it, good for you. But I would strongly ask you to consider maybe moving your capital, at least, if not all of it. Whatever you invested, at least pull that much out and move it somewhere a little safer. Thanks for watching the video as always. We'll see you in the next podcast soon.
Thank you.